In the recent macro aspect, there are signs of weakening in the U.S. inflation and employment data, and Fed officials have expressed a dovish stance, which has increased expectations for a rate cut in September. However, the trend of some commodities remains weak, which means that the focus of the market has shifted from the original Fed's hawks and doves to the current economic fundamentals themselves. In addition, the U.S. economy has recently begun to show signs of weakness, and the Fed's dovish stance will weaken the U.S. dollar index, which is beneficial to the strengthening of the RMB, thus changing the current domestic exchange rate pressure and facilitating the recovery of the domestic economy. However, due to the weakening of the foreign economy, including the U.S. presidential election, Trump has a high probability of being elected. Trump's policy orientation is conservative and anti-globalization, and there will be more aggressive tax increases, which will have a greater impact on domestic exports in the short term. Compared to the early 1970s, when American conservatism was on the rise, the United States also began to raise tariffs and lower interest rates in 1971 to stimulate industrial production and exports in the United States. Later, Germany and Japan's exchange rate appreciation stimulated domestic consumption, and their exports to the United States were affected. However, their domestic consumption did not rise quickly, leading to significant downward pressure on the economy in the short term. In addition, the global economic system was centered on the United States at that time and now. The difference is that the degree is different. In the 1970s, the GDP of the United States accounted for 31% of the world, excluding the Soviet Union, which accounted for 35% of the world. Currently, it accounts for 24% of the world. The influence is not the same, but the impact is definitely there. Compared to the current situation in China, there should also be such a wave. Another difference is that we have started to adjust the structure since Trump started the trade war in 2018. At that time, there will definitely be a wave of impact on the domestic market, but the intensity should not be as strong as that of Germany and Japan at that time. Now the whole market is fearful of cultural goods, so it is expected that this wave will come earlier. Domestically, the third plenary session of the 18th CPC Central Committee is being held this Wednesday, and we need to pay attention to policy changes. From the perspective of economic cycle, the domestic economy is gradually recovering, and the pressure on the domestic economy after the weakening of the monetary policy stance in the external market has been alleviated. In terms of industry, the current contradiction in the coal market is focused on electricity consumption. As we enter the dog days of summer, the high temperature continues nationwide, and the daily consumption of power plants rises, but the overall social inventory is at a high level, which suppresses the actual coal price. For coal prices, the logic of peak season is hot weather is expected, and the hot coal price may not necessarily rise, but if it is not hot enough, it is likely to fall. On the other hand, at the current time point, the actual peak season consumption has not yet been realized, and the coal price has not formed a trend of decline. It is expected that the overall coal price will fluctuate within a narrow range in the near future. In the later period to August, it is necessary to prevent the consumption of power system from peaking and falling back, and there is no risk of coal price decline due to the expected increase in non-electric consumption.